All right, guys. Hello, everybody. Hope everyone is doing well. Thank you for the comments, the likes, the new subscribers. Thank you for supporting the channel. We're only growing. This is not my full time thing, so you guys know that sometimes I'm gonna have frequent videos. Sometimes it's gonna take a while. I have a new podcast that recently came out with my dear friend Dionysios Bastas. He's in the Hellenic Air Force of Greece, one of the best air forces in the world, one of the best pilots a country can offer in NATO. He's in a very interesting position within the Hellenic Air Force. Not a pilot himself, from what I know, but he's involved in a lot of interesting, fun stuff. So please check out his channel. On this channel now, I want to emphasize a little bit on the markets, and let's steer away from the interest rates in TLT. There was a comment about options for TLT. TLT, in my opinion, is looking great. And these are beautiful levels. Now, one thing I want to focus on here is on the weekly and perhaps the monthly. It's good sometimes to put things into context, into perspective, and look at the forest as opposed to the tree. Sometimes we have monumental episodes in life, events that can be devastating, but we have to focus on the forest, okay? It's funny because at this moment I'm dealing with a lot of personal differences and changes and events that have taken place in my life in the last few months. So when I look at FUD, which is the fear, uncertainty that you get to see a lot in the markets, it's very interesting because the markets reflect the inner psychology of the individual as well, because the collective can reflect what we sense as an individual. So in this case right now, what are we seeing? We're seeing the opposite of euphoria. We're seeing a very skeptical market, a lot of precarious events in the world. World War III is always a discussion. The China-U.S. trade, the debt market, the deficit, the budget, what's going on now. This talk of stimulus checks again, and these are things that have been going on forever. The last few years, I noticed there are cycles in the markets where we tend to see similar events unfold. Things don't change, right? It's just we tend to have temporary amnesia or recency bias. So in this case, I want to talk a little bit about Bitcoin because Bitcoin reflects the aspect of risk assets at large, especially when we've seen how much money has gone into the absorption of this beautiful asset. I think Bitcoin is one of the most beautiful assets ever created, regardless if it's supported uh, by the governments now or perhaps even created by NSA or CIA operatives. It has a very interesting story for sure. But let's get into the charts. I want to look at the weekly and then the monthly to gain some perspective. All right. So let's take a look and see what's happening over here. We're hearing a lot of discussions about the top being in, and this is the end of Bitcoin's run. Okay. Well, let's take a look here. The last time we saw that was last year in December. Again, similar discussions. We saw this M top kind of formation, similar to what we saw back in 21, 22. All right, when I missed the top by quite a bit, and I this was actually one of the first years where you were allowed to use Bitcoin as if you as an in an apothecary to as a collateral to take out a loan. And I had taken a loan in one of its all-time high, but I never really sold. And it had proven to be quite the interesting ride when you're paying off an asset that is depreciating quickly, especially when you've taken up a loan that is in the very high end of the price. But back then I had 2 Bitcoins, so it wasn't too bad. Looking at the situation we are here, if we take a look at the drop percentile wise, percentage wise, we're we're not we're not in these ranges. So for instance, last year everybody was calling for the top. It had a 31% drop. I remember this. And what happened later on? Well, it rallied 41%. Okay? Where are we now? We're at a drop of 24, let's say 23%. 23 something percent from the very top. And people are calling for the top. Very interesting to see this. I think we still have a lot to run. I do think, though, if we break down from here down here, this is a danger zone, and that's when we might be discussing together that this was the top 126. For now, I think that we will see a sharp recovery up if we manage to consolidate around these levels. We might see a little bit of a lower drop, maybe to 89,000, but a very sharp recovery, like a snapback, like we saw over here, like a W formation moving upward. And again, talking about stimulus checks, talking about the rates dropping, talking about, you know, this over here, which is not often analyzed, which I think is very important because this indicates the market cap dominance of USDT, which is the stable coins, right? So it's the conversion of US dollars on the exchanges. And I think that overall, if we look at the markets, the markets have had such a tremendous rally. These red weeks should be appreciated only because it allows for new money to come in. And of course, we're in all time high territory. But if you look at what happened back in February, March, April, look at this recovery. I really don't think that I don't think we're going to see something like this anytime soon, but this was a tremendous recovery that indicated again that there's just so much money to be into the markets right now as we speak. Same for Bitcoin. I think there's just so much money that has to go in here because of its political implications across the world, with the dollar also being pushed aside. And I do think that if the dollar continues to weaken, which I do suspect we'll see lower prices in the dollar, I'm not rooting for it. I'm indifferent to the dollar. I don't wish any currency to die, but we are devaluating currencies quite a bit. I think we could see in the high 80s. So I think we could see easily a drop of 12% of the US dollar. Maybe not 12, maybe 10 to reach these levels here. The chart looks bad. This chart looks very bad from from this drop, this consolidation downwards. So we might not take this long to consolidate. Look at this time. It took from January 2023 to October September 2024. So it took like about 9 months of consolidation to have a rally only to go lower. Okay, so in this case, if we don't rally in the next few weeks halfway to go to a sharper pullback, then I think that the big drop will be imminent, even, you know, closer to Christmas. So let's see what happens here. This is very interesting because this could move in conjunction with the rates, the TLT, and this can help boost assets like Bitcoin to rise even higher. Now let's look at gold because gold is very interesting. It's showing us the way, and it has been leading quite a bit ahead of other commodities in terms of its pricing. I think that right now, if gold can maintain this position, if gold has the ability to consolidate here onwards and not lose momentum, then this could go much higher. But if this is just a bounce and then we go a little bit lower, it's going to take longer time. But yeah, I can see gold rallying in the mid 5,000s in 3 to 6 months, if not higher, in the next coming year. So it's going to be very interesting to see how we move ahead and how things unfold here. But as you can see, markets are like a puzzle. We have to look at different pieces together and compare. One of my favorite stocks, I love to death. I love this company, Marathon. I've been holding Marathon for a very long time. I actually bought, when I entered, I bought somewhere over here. I didn't think it was a cheap price. I didn't think it was a high price. I just was so intrigued by this company, and I've been holding for a very long time. I've been trading this for a very long time. I've been holding. I've been trading. I've been using options and aggregate. I've come across as a winner, but it's been a very rough ride. And at some point I had lost money or had to carry a negative balance for a very long time until we had these snapback moves up. In this situation, though, if I'm honest, the way how I feel when I look at this chart is just a major consolidation. That's what I feel from somebody who takes takes a look at many charts on a daily basis. This is the first feeling that I get. This is a major consolidation for a move up, okay? And this move can be very, very violent and very fast. I know this is a weird. Um, let's hide the drawings because it looks very weird. But I want to just remind you that whenever we have moments like these in charts, where there's a lot of despair, a lot of negativity, you often find that money rotates so fast in a blink of an eye, and we've seen it here many times, these V-shaped recoveries and these W formations that essentially accentuate the consolidation for a much higher leg than the previous. So what I'm trying to say here is that if you're into the miners, I do think Marathon is a great hold right here. I think you can buy here. I've been buying aggressively options. It's hard to fish the bottom. It's hard to tell where the bottom is. This candle was a telltale sign. I was selling all day when I saw this candle. I didn't sell enough. I sold 50% of my options and I held in order to add over here, which I could have added more, but hey, that's the name of the game. At least I managed to cut down most of my losses and increase my position without adding any capital. Actually, increase quite a bit my position without any more capital. So my point here is that if we see Bitcoin snap back in the next few weeks, we should see Marathon too. This is for anybody who's aggressive out there, wants to make a quick 20-30%. I think that this is your area of entry. This is perfect if you want to enter and buy some option contracts. Now, why is it that Bitcoin and the markets overall have received such a negative rap? What's going on right now? And again, this natural gas chart really looks similar to the Mara chart. Like if you compare this, like you see what I'm saying? This is a major consolidation. I remember I got into natural gas around these levels here. After this was after the Russian invasion, what had happened after it had peaked in terms of the news of the Russian invasion, and then natural gas was coming to a low. Look at this entire consolidation. I could see natural gas touching these levels. This is major resistance. Amazing move. One of the reasons why the miners and in general a lot of tech stocks have received such a negative press bias and media coverage is because of the rising costs of all these data centers that require energy and the rising costs that have to come as a result of that. Energy is going to be a huge play. We're entering into a super cycle of energy, and I do think that anybody who's looking at oil or looking at uranium could be this could be an amazing positioning for the not so long future. I don't suspect we see such a drop again in oil, but if I had enough money right now to allocate, I would start buying oil right now. I can see oil hit 150 a barrel in the next 6 months, in the next 9 months, in the next 2 years, and it can happen really fast because of, again, the rising costs. We might see a crazy super cycle in oil. Who knows when it's going to happen? But I think that in the not so distant future, we will see some amazing prices in electricity. Hopefully, we're in uranium at that time, so that way we don't have uh, high expenses, um, thrown at our faces into the consumers overall, because the consumer sentiment is one of the lowest. I don't know if anybody has looked at the University of Chicago. I believe it was the University of Chicago, one of the lowest consumer sentiments we have. So going back to S&P 500, looking at the Russell, we are in a territory right now where I think a lot of money is going to come in, especially if we look at the M2 supply. Where's the M2 supply stock? Here we go. Look at this. This is gearing up for. This is a parabolic move. Like, look at the last, since November 2024. Look at what has happened. Let's look at what has happened in the stock market. Okay. All right. So there is enough liquidity for the markets, and liquidity is entering more and more as we speak, and we have to see more printing. It's inevitable. It's inevitable. In order to sustain this Ponzi, you need to have more capital to push up. Everything is super leveraged. It just needs more liquidity. I know we sound like drug addicts, but that's what the markets have become. The markets are drug addicts. Liquidity is the drug, and that's what it's needed. That is its life force in order to sustain. I think that Bitcoin can reach 89,000. Absolutely, I wouldn't be surprised. Or in these levels, 94, 93. So everybody who's been watching this video, I hope you've been watching until the very end. These are the levels I'm looking at over here. Over here. These are great levels that I suspect Bitcoin goes to. If we go any lower, that's not a good sign. This is going to be a danger zone. We'll have to have a snapback, a really, really strong move upwards decisively in order to talk about escaping the dangers. I hope you loved this video. Last chart, I'm just looking at this chart over here. This chart to me is very interesting. See, in chart analysis, when patterns are very obvious, often the opposite happens. I've been doing this since 2018, and I've been looking into just different courses. I've been taking different courses. I've been doing charting for a lot of different commodities and stocks. And if you've been following me for some time, I have a high level of success. Not because I'm some type of guru, not because I use a lot of tools. I don't use a lot of tools. I don't use a lot of, flashy features. What I use, though, is my information, the knowledge that I'm receiving, but also comparing charts together and looking at patterns, looking at liquidity, and trying to understand sentiment. The sentiment is very bad right now, and it's not the worst that it can be, but everybody's talking for a bloodbath. Going back to the chart, though, the interesting pattern I want to bring to your attention here is this inverted head and shoulder. Shoulder here, head, etc. The reason why we want to look at this is because if we have a close above the neckline, so let's say we go up to 6% and we consolidate and confirm, then the length of the head typically is the next expected move. So we can expect a move back to 8.5% approximately. However, If this move is not fulfilled in the way that I said earlier to consolidate above the neckline, we will see a move down here. I guarantee you we're going to see a crazy move down here. Okay? We're going to see, because usually when the opposite happens, it happens very aggressively. So, for instance, if you ever notice, if there's a consolidation that doesn't happen for a bull flag or bear flag, the opposite that will take place as a move is much more aggressive than the previous one that it was expected. And we can see this happen time and time again. I'm trying to find some more examples of patterns, but this chart is a very tricky, treacherous chart to analyze because it has to do with the market cap dominance of USDT, and this is not a very solid chart historically. It's very volatile. It's getting late, guys. I'm sorry. But yeah, in terms of TLT, beautiful consolidation. Look at my lines, they've been respected. I had, for some of you guys that have watched my video, um, I drew this line some time ago. It touched beautifully and it bounced. Now we're seeing a bit of a check back. I think that this is just simple consolidation in order to move much higher. I told you I can see TLT being in the mid 90s in a few months, if not um, if not 3 months specifically. So let's take a look at that. Um, on yeah, on the daily, it has been going up. Might go higher. We'll analyze this in the coming future. Sorry, guys, a lot of charts. I know. I hope you guys were able to digest the information. Thanks so much for watching the video. Subscribe, like, comment. I want to hear more from you. Thank you.